Check on the price of crude at this hour following yesterday's slide, and we see that's resuming today. We're closing in on 100 from the other side. Brent and U.S. Crude both falling. Prices falling after Russian top negotiator called peace talks with Ukraine constructive. Joining us now is Jeff Currie, Goldman Sachs global head of commodities research. Is that it, Jeff, or is it? I think now it's almost binary. It's what happens in Shanghai versus what happens with Russian oil. I guess it's both. You got supply on one side, demand on the other, and they're sort of offsetting each other, and whatever becomes more front and center in traders' minds seems to dictate where the price goes.
Absolutely. You know, for rightly or wrongly, I think the big sell-off we saw yesterday was driven by COVID concerns, particularly the lockdown in Shanghai. But I think your point is you got the offset of what's going on in Russia. I think the key point here is COVID demand disruptions are transient, while the supply disruptions are far more persistent. Why? Because you're not investing in Russian production capacity, which is going to impact supply further on down the road. So the net of this, it's still very bullish. We view this pullback as being a buying opportunity. We stick to a near-term target of 120 and an end-of-year target of 135. And I think one of the key points here is it's not about so much the supply and demand of the commodity itself. It's about the supply and demand of the capital used to create this commodity. And these markets are really facing a liquidity crisis, whether if it's the financial markets, whether it's stocks, bonds, credit, whatever it might be, and even the commodity itself. Liquidity is collapsing at a time it really needs this liquidity.
Since the incremental wild card is Russian oil, and that's not, what is it? Well, I don't know how many barrels out of 10 the world is. Is it 1 out of 10, something like that? So it is important. What's happened in the last 3 weeks to a month? I mean, initially it was still flowing to some extent. Maybe you had to sell it at a discount, but then we read about things taking hold over time. How much is it depleted at this point, what Russia is supplying to the world? Where are we? How far down is it? And what is that likely to look like a week from now, a month from now, 3 months from now?
I mean, the bottom line, we put the disruption somewhere right around 1.4, 1.5 million barrels per day, call it 1.5% of global supply. So it's modest. When we think about the areas where you can get a disruption, all the pipelines are flowing. In fact, you have more oil going down the pipelines and more gas going down the pipelines today than you did before. The disruption is in the Black Sea because that's where the ships go out. That's where the problem is. Now, there's two disruptions. There's the ones that are associated with Russia specifically, which is where that 1.4 million barrels per day comes from. But then there's the more recent disruption there in the Caspian of the CPC pipeline coming out of Kazakhstan. It was due to mishaps on the pipes. That's another, potentially another million barrels per day, but it's likely to be very, temporary. So I think the key one to really watch here is what's happening to loadings in the Black Sea. Which, by the way, they popped up yesterday morning. I'm not going to read anything into it, but overall, call it a 1.5% disruption to global supply, which, hey, that's meaningful.